Propertyology regards right now as a very exciting time for investing in Australian real estate. There are some fantastic opportunities that Propertyology can help you take advantage of before buyers re-emerge from their coronavirus cocoons. Propertyology has a national focus. Now more than ever, experience and knowledge are the most valuable currency. Propertyology has that in spades. To find out how Propertyology's multi-award-winning buyers agents can help you prosper, contact them now at propertyology.com.au.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Good, everyone. How you going? Thanks for joining us on the podcast today. Sort of stepping away a little bit from a lot of the information, the rhetoric, the noise somewhat around COVID-19, the coronavirus, and impacts on property markets are something we're continuing to focusing on. But you may have tuned in recently to a conversation I had with one of our regular guests, Propertyology Head of Research, Simon Pressley. We had a really good chat around the coronavirus, what it means for the market, and how you can best prepare yourself as a property investor to navigate through it. That's obviously changing by the minute. So make sure you keep connected with smartpropertyinvestment.com.au so you know what's happening at any given time. But we alluded to during the conversation that we will get back together at a point in time, and that time has arrived today. There's a key theme that we wanted to cover off, and Simon's been and has been over the years very generous in his bandwidth to spend time with me and work with us on helping inform and educate property investors more effectively. Simon's views sometimes can be polarizing depending on how you see the world, and we spoke about that last time we got together. So that was mainly around one point. It's a point that I wanted to cover off today with him over the next sort of 30, 40 minutes or so, just in relation to the true meaning of housing demand. Now, if you've been tuning into the Smart Property Investment Show for many years, it's been going now, we're highly connected with that investors are making better informed decisions based on the basic tenets of property investment. And one of them is that population growth is absolutely critical to capital growth, as in everyone talks about the fundamentals, everyone talks about when and how they invest in property, what are the types of attributes that they look at, make informed decisions on what might constitute capital growth or what might constitute improved yield. So we're going to tackle that today. It's very much around housing demand. What's housing demand? How housing demand translates into capital growth or increased yields, i.e. a better investment, and whether or not population growth is actually as important as it actually is. Now, Simon, you're probably going to say I was saying that maybe one of the other biggest myths in real estate, and by saying the biggest myth in real estate, property investing, that population growth isn't necessarily as important as what people think. It's probably also that you need to be investing in capital cities, other opportunities elsewhere. So you're quite well known for these commentaries. So we'll dig down into it today, and we're probably covering off something that you haven't done in so much depth publicly beforehand. And I imagine this conversation would lend itself to a half days of work, let alone maybe the time we're going to spend together. But how you going, mate? You well? How's things?
Yeah, mate, really well. This is new ground here, unpacking housing demand and proving to everybody that population growth is nowhere near the most important thing is something we've always known, we've proven, but we've never sort of shared publicly, A, the proof, and B, what's more important. So looking forward to this. Bit anxious as to how I go, Mike, because whilst I know there's so much to explain, whether we can teach people in an hour, time will tell.
Yeah, time will tell, and we'll make sure we follow up with this with a good story online on smartpropertyinvestment.com.au, and it might allow us to, present this information a lot easier. I know we've got a lot of graphs and charts around it, so it's very hard to interpret numbers verbally, and you would expect to see the seminar. You can point to something on screen. So, the secret in us getting this right is being able to verbally tell the visual stories. So we'll try and do our best in regards to this. And by the way, Simon, you would have seen him, over many years presenting across a whole bunch of different forums and platforms. He comes onto the Smart Property Investment Show semi-regularly, and we have a good chat, and his stuff's pretty popular. So we like to bring him back. My particular view, that I don't want any of our listeners to think that what Simon says today, I agree with. It's my job to shape a very informative conversation with Simon, and we'll debate these points well. So my view, I don't have any view. My job is to aggregate ideas so you can be more informed about helping you be a better property investor. So that's just a preamble for me. Simon, maybe I can reflect on that once after we get through this and see whether or not my views to actually correlate with your views and whether or not you would change the way I think about this. But this is all about supply and demand. So simply about supply and demand. I think we need to have a chat about what supply and demand is. It's a mantra that everyone uses when it comes to property market, as in how much stuff is there to sell and how much do people want it? Is this the basic tenets of real estate market, Simon?
No, it's not. And we hear it all the time. I actually chuckle, no matter who I hear it from, when they sort of say, oh, look, it's simple. It's the basic fundamentals of supply and demand. And I hear that, and I get a visual image these days of, that I think it's an insurance ad, meerkats, simples. Yeah. Believe me, property markets, I would argue there is nothing more complex on the planet other than perhaps finding a cure for cancer than property markets. And it is nothing as simple as take a population figure and extract a number of dwellings, and X minus Y is Z. It is nothing like that. Hopefully by the end of this, I will have proven to you that that's actually not the case and help people understand why it's not the case and what's more important things. But I guess some common examples we hear in the world with supply and demand, the cost of a barrel of oil, or a wagon of coal or a crate of bananas. Coal is coal, oil is oil, bananas are bananas. But people are not homogenous. People are not the same. People are not robots. We are all different. We've all got emotions. We've all got different things we're attracted to. And properties are not properties either. Again, it's not comparing a piece of coal to a piece of coal. We've got properties that are absolute mansions and beautiful. We've got some really, really primitive stuff. So this is why it is nowhere near as simple as supply and demand. It is not a homogenous person who's a buyer, and it is not a homogenous product that is being purchased. A couple of months ago, Phil, we did a podcast on the top 10 property market influencers. I think it was one of SPI's most popular one. And people might remember population growth did not make the top 10. So I've never, ever said that population growth is not important. What I am saying is, as a property investor, you're making arguably the most important decision in your life financially. And if you focus, get obsessed with population, you are giving yourself no chance of making the best decision possible.
Let's have a chat about that. So, I guess we're shining a spotlight on population growth because, from your point of view, you want to dispel the current perception that it is the most important, or one of the most important things when it comes to, what properties you're going to buy and where. So, is that
it's of no consequence to me. I've studied the evidence. My attempt today is to help people to understand what that is, and they can choose to accept it or reject it. But the purpose of introducing this topic is to educate people so that they're not falling for the myths. Because I will admit, many, many moons ago, I too used to think population growth was the most important thing and made investment decisions based on that. And then in subsequent years, become frustrated and disappointed. So I have been on a mission over the years to understand, and I've studied property market history for a living. So because of that disappointment as an investor all those years ago, to understand, well, what really does constitute housing demand? And it's not population growth. If I can share some facts, Phil, if I may, first just to prove, so this is not opinion, these are facts, just to prove to people that there is more to it than population growth. Over the last 20 years, a long period of time, the best performed property market in all of Australia is Byron. It's Australia's 73rd largest city from a population size. So clearly population size is not the driver of price growth. Its annual change in median house price of 9.3% is streets ahead of every capital city. But yet its population growth rate over that same 20 years is below the national average. Fact number one. Alice Springs in the centre of Australia, its population has declined over the last 20 years. Gold Coast, its population has grown by 230,000 people over that period of time. The median house price of Alice Springs and the Gold Coast has been the same increase, 190% over that long period of time. The best performed property markets over the last 3 years, their average annual population growth rate has been far from spectacular in places like, in no order here, Glenorchy, Orange, Colac in Victoria, Launceston and Burnie in Tasmania. The strongest population growth of our capital cities over the last 3 years has been Melbourne. But yet its median house price growth over the last 3 years of 7.7% is miles behind Hobart at 31%. In southeast Queensland, Ipswich and the Gold Coast, their population growth rates have been spectacular, practically double the annual average. But their property price growth has not moved an inch. I could go on, list hundreds of these facts, but hopefully people are getting the point that there's a lot of evidence over 20 years, 5 years, 10 years, or last year to show that there's obviously more to demand than population growth.
So I could say, and I don't have the numbers in front of me, and I'm sure we can go and find them, that you're being very selective in those examples, because I'm sure you could go to even suburb in a capital city and probably find similar types of stats.
What have I got to gain? So I've got a skeptic here, and that's okay because the property world's full of that. What have I got to gain by being selective with facts, Phil? What have I got to gain by contradicting what people believe? Why would I do that?
This is the question, right? And worth a discussion around it, because what I'm saying there is echoing probably what a whole bunch of other people are saying. Detractors in the market, people that, other people who are engaged in the business of analysing property, everyone has some sort of bias on how they choose to present their facts.
Yeah. So what is my bias? How do I benefit financially or otherwise by saying anything other than what evidence has taught us? That's why I've quoted facts here.
Yeah, and therein lies it being a good point. So what would you have to benefit presenting these information versus other markets or whatever, right? This is it. So you're in the business of providing guidance and information around property markets and helping people make more informed decisions. These are the facts that when you sit in front of people, your clients, and actually have these conversations and present those facts, what typically happens?
Well, I'd like to think that they would put us in the same professional category as, say, an accountant, a medical practitioner, a lawyer. And that's what professional advisors are doing. They're people who first and foremost have their clients as their number one best interest, and there's no compromise on that. And they're people that come from a position of enormous experience in a chosen field and significant qualifications in a chosen field. That's what advice is. So again, people can accept or reject what we or anybody else says. What I'm saying is, here's a bunch of facts, and I've presented those to help people go, well, geez, that's pretty compelling. And it's not one location or 1 year. That is pretty compelling. So clearly there is more to it than this. Again, people can accept or reject that. But if they go down the same path of believing what they believed before, all I'm saying is, as I was many years ago, you will be disappointed with the outcome of the decisions you make because you're not focusing on the most important thing.
So talk me through your journey as a professional in property investment, starting way back when, and embarking out on this career on the basis of tenets around supply and demand, which we spoke about, and how population growth was a key driver of property market, performing well, right? Whether it's capital growth or yields, but primarily we're talking about capital growth here. When was it? At what point did you start questioning that population growth might not be the most important part of market performance, or even not within the top 10 of the most important parts of market performance? What happened and why?
Yeah, so again, it goes back, we're probably talking 20 years ago or so, Phil, making a decision, believing what everyone else believed, all right? And why we believe it, I guess, is because if all the masses around us are saying the same thing and generations before them have said the same thing, then I guess there's no reason to question anything, yeah? And I was as guilty as that as anybody. And so did what everyone had said. And it makes sense to me at the time that the more locations population grows by, of course, property prices will grow, until it doesn't. And I guess you only know it doesn't if you've actually transacted in it, because why would you have an interest in exploring it anyway? So it didn't happen, but I knew, so this is going back 20 years ago, right? So I knew that markets that I had bought in hadn't performed well, and I knew that population had been strong, but the inquisitive mind, I call it the science brain. Us with the science brain, always, the word why is probably the most common word. We've got this innate, we need to understand why. And this is where numbers are really useful, because numbers is not a bias, it's not an opinion, it's a piece of evidence. So what we've done, and this isn't just something we've done recently in preparation of this podcast. What we've done a long, long time ago is purchased all the evidence in the first place. So we break Australia up into the 550 individual local government authorities, which I guess is the equivalent of the stock exchange of Australia's property market. And so from that, we're able to firstly deal with the evidence of what has the median house price done over 1 year, 3 years, 5 years, 10 years, 20 years for every one of those locations. And then the other bunch of evidence is what's the population growth grown by in each of those locations over that same period of time. And there's actually no correlation whatsoever. Now, when we got the evidence and spent many, many months unpacking it all, I was as blown away as what you are listening to me here and what your audience will be, because it didn't make sense. But when I've got hundreds and hundreds of locations in front of me here that's showing there is no correlation, it's like, well, it's compelling. It's not a one-off thing. It's compelling. It still didn't answer the question, therefore, what is the driver of property prices? What is demand? But what it did say is population growth is not the main thing. Now, I've never said it's not an influencer. What I have and will continue to say strongly is it doesn't have anywhere near as big an influence. We'll attempt to, in the rest of this podcast, to describe what does have the biggest influence.
Yeah, and that's a good point. Now, I was going to say this, as those people with a science brain, and I wouldn't be one of them. I'm more of a creative type of person, but I appreciate the process that scientists go through in their craft or the science, right? So that is to try and prove or disprove a proposition and the process in place for that to happen. Now, as you've gone down this journey of stress testing this principle of whether or not population growth is the major or primary driver of property market growth, how have you approached that? So you've spoken about getting the data and trying to analyse, interpret it, but what other type of scientific process embraced or adapted, or what methodology have you embraced or adapted to do that? Because if you speak to any scientist, there's process and methodology to
absolutely.
To this.
So in every single year, including in the calendar year recently completed, every single year throughout Australia, there'll be some locations that perform spectacularly well. There'll be some locations that perform spectacularly poorly, and there'll be the majority of locations that will sort of not do much. And so I guess it's years and years of doing this as a full-time profession of you get an understanding for one of those locations in 1 year, what was the dominant force behind why it did well or why it did not so well. But you also, when you're doing this all day, every day, you also see that it's never one thing. There's often a dominant thing that, why location A did really well or not so well. But there will also be other things that had an influence. There's always a lot of things that had an influence. So it's doing that, year after year for every location. And when you're doing that for so long, you've got a massive big body of evidence that's able to then, for you to say with confidence and with all that evidence behind you to say it's these things here that have the biggest influence on property markets. These other things still have an influence, but they're not as dominant. Does that process make sense?
Yeah, it does. And it's important for our listeners to understanding about how you go through this. Now, Simon, we're going to go to a quick break, but when we come back, I think it's important that we actually break down the components of population growth so we can truly stress test whether or not it is as important as what other people may say. We'll be back in a moment.
The Trident Formula, created by Sam Gordon at Australian Property Scout, is the strategic way to build a profitable property portfolio. If you're looking to perfect your strategy, go to www.australianpropertyscout.com.au to book a call with Sam himself.
Welcome back, everyone. Phil Tarrant here. I hope you're enjoying our podcast today. I'm here with Propertyology Head of Research, Simon Pressley. Now, Simon, before the break, we sort of spoke about this concept of population growth. I think it's important that we actually break down the components of population growth, because normally it's a catch-all of a whole bunch of smaller, more incremental changes or developments which shape population growth. So let's go through them. What makes up population growth?
Yeah, and often when the ABS release data, there's all sorts of reports that we can read and hear about population growth, but often they just talk about the size of a population growing. Location A grew by 50,000 people last year, or it grew by 1% or whatever. So this bit talking about components is helping people understand, well, what makes up that figure, the 50K or whatever. So we're looking here at Australia's largest city. ABS data is released as a financial year. So the financial year ending June 2018. So Sydney in that year, I'll use some round figures here, Phil. Sydney grew by 93,000 people total population. But how did that figure come from? Well, firstly, there were 72,000 babies born in Sydney in that year. And there were, round figures, 29 people that died in Sydney that year. So one component when the ABS break population up is what they call natural growth, the difference between births and deaths. The other component is net overseas migration. So in each year, people leave, say, Sydney to go to a different country, and similarly, there will be other people that come from another country, in this case, to Sydney. So net migration is a component. And the fourth and final component is internal migration. So that's an existing Australian resident that before the reporting period lived somewhere else and then relocated to a different part of Australia. So if we just look at Sydney in 1 year, the most recent year, the 93,000 total population change, 72,000 babies don't buy houses. 29,000 people died. Not only do the dead not buy houses, I would argue, if anything, they probably release a little bit of supply. Overseas migrants, that constituted 77,000 out of Sydney's total 93,000 population growth in that 1 year. Have a think about if you live in London or China or India and you relocate to a country, I'd suggest to you that the first thing you don't do when you get off the plane is go to an auction and buy a property. Yes, you do need to have shelter, but this is the thing that catches a lot of people out with population growth. We all need to live somewhere, but there's no law that says we have to buy where we live. And in fact, a large percentage of overseas migrants not only don't buy when they land here, they can be many, many years, if ever, buying a property. So 77,000 out of 93,000 in 1 year were overseas migrants, most of which will rent. And the fourth component for Sydney is the internal migration, and that was minus 27,000 people. So there's 27,000 people that were there at the start of the year that weren't there at the end of the year. So if we look at 1 year and where is the demand for housing for, in this case, one city from the population component, and there is actually no extra demand from that. Again, babies don't buy properties, dead people don't buy properties, overseas migrants, 20% of them rent, and internal migration was a big negative figure, 27,000. So the thing with population is property is about population, but not population growth. What it's about is what the population behaviour is. If I can help the listeners get an understanding of population behaviour, I think we'll then have a better appreciation why population growth is not the most important thing, but some other things are. So again, we'll just keep using Sydney for consistency as a case study. So roughly speaking, Sydney's population growth it'll increase by about 1.5% per year. But what's more important is what the other 98.5% do. Those of us who are already in the city, it's what they do that will have a much bigger influence. 98.5% is a much bigger mass than the 1.5% population had grown by in that year. So if there was no population growth, because there's plenty of locations throughout Australia in each and every year where there's no population growth, but yet property prices grow. Just have a think about you as a person. Everyone listening to this, have a thinking about you as a person. Have you ever lived just in the one property all your life? And of course, the answer to that is no. So we move properties all the time. When we do move properties, we're transacting in real estate either as a tenant or as a buyer. Now, if enough people do that in an individual city in an individual year, there'll be enough pressure that will put property prices up with or without population growth. And this is why there will always be years where locations can actually have population decline, but prices grow. And similarly, there are years, and I quoted some earlier, where population growth be enormous, but property price growth did bugger all. So I'll just say that last bit, one really important bit there. Property price or housing demand, it's about the behaviour of the population, not what the population grows by.
Okay.
Focus on the 98.5% or whatever it is in a location. The things that are influencing their behaviour is more important than whatever the population increases by, the 1 or 2% in a given year.
So your thesis then is that population is critical, but population growth is not the primary driver of change in market behaviour. It's about the people who aren't.
Yep.
Yeah. Okay.
Now, again, where this is an audio production, not visual, but Phil's got a chart in front of him and I've got one here that will attempt to explain to you using our mouths. But here's a piece of evidence where we've picked two metrics that have the closest correlation to each other. So what we're looking at is the city of Brisbane. We've got 3 full decades of Australia's third largest city. And it shows the annual change in median house price for every single year over those 30-year periods. And it also shows the volume of properties that were purchased in each year. And it is practically a mirror image where you have a year that the volume of properties that were purchased was really high. The median house price growth was also really high. They are the two most connected metrics of all the things that you can measure through. There's almost a mirror image that Phil and I looking there, which is proof that it's buyers that drive property price. And as I said earlier, when we were unpacking the components of Sydney's population growth, we all need to live somewhere, but there's no law that says we have to buy. But it is the buyer behaviour, the population behaviour, that directly influences what property prices do, up, down or sideways. You can see that there, Phil?
Yeah, I've got the graph in front of me here, and it is a large mirror image. And, to paint a bit of a picture, there's chunks of sporadic growth in Brisbane over a period of time, and the transaction volume pretty much mirrors the same trends in price growth changing. And it's obviously increases and decreases in price growth. And over that period of time, there's only 3 periods where it actually goes into negative. And one of those negatives is most recently in Brisbane, Simon.
Yeah.
And you're talking about transaction volumes at the bottom end of 20,000 properties and at the top end 50,000 properties. So that's the spread on transaction volumes that happens in Brisbane at any given time. And that's a fair fluctuation, right? From at bottom at 20 to topping out at 50, right? And a lot of that's going to be what supplies on the market at any given time and all this sort of stuff, right? The one thing, just before I move on, Simon, what's back in 92, 93, 94, where you've actually got a decrease, like a decrease in change of, so property prices not growing as fast as what they, but you had more transactions in that market. That's the only anomaly as part of this whole.
Yeah, it is. And what it does, Phil, is it just highlights the complexity of property markets. So I often describe the property market of an individual town or city as like a big jigsaw puzzle. There are lots and lots of pieces to it, and no one piece will determine what happens. It's the sum of all those pieces that will create a picture. So it's never an exact science, but this chart or these two metrics are the closest aligned to anything else when it comes to what has the biggest influence on property prices when they go up a lot or down or sideways. Of all the things we can measure, what is closest to that trend? And it is the volume of properties that are transacted in that year.
So the more properties that are transacting, the greater the propensity for a positive change in capital growth.
Yeah. So we can have, and there are plenty of facts that we can prove to show, here's a location in a given year, it had really, really strong population growth, and it also had really, really strong property price growth, right? But the true answer as to why you had strong price growth won't be just because of the population growth. It will have been a contributing factor, but understanding that's 1 to 2% of the total population, what really influenced the behaviour of the masses. And hopefully by the end of this, you'll understand what those other things are.
That's interesting, mate. So I get what you're presenting here, and I think that the key outtake for our listeners at this point in time is that population is absolutely critical to property markets. However, it's not the growth in population which is the key driver. So, the thing is, a chart like we have in front of us, and we'll put up on smartpropertyinvestment.com.au, there would be so many stories in a single year which would tell you why there was an increase or a decrease from the year prior in
Spot on.
transactions. And that's the science, isn't it?
Yep.
So what we're going to do, I'm going to do that. Let's go to a break beforehand. We'll be back in a moment.
Propertyology regards right now as a very exciting time for investing in Australian real estate. There are some fantastic opportunities that Propertyology can help you take advantage of before buyers re-emerge from their coronavirus cocoons. Propertyology has a national focus. Now more than ever, experience and knowledge are the most valuable currency. Propertyology has that in spades. To find out how Propertyology's multi-award-winning buyers agents can help you prosper, contact them now at propertyology.com.au.
Welcome back, everyone. Phil Tarrant here with Simon Pressley, Propertyology Head of Research. We're just having a really good discussion around population's role in determining the outcomes of price growth or price drops in property markets and the role of population growth. Now, Simon, before we went to the break, we just had a bit of a chat around all these little micro stories which are going to be determining whether or not property is changing hands. You know, this is the art form when it comes to property investment. So what are the key characteristics that influence property buyers?
Yeah, exactly. So we said it's not about population growth, it's about population behaviour. Let's have a think about, so what property is, the fundamental purpose of property is the provision of shelter, which is where that term, safe as houses, comes from. Even in periods of, really, really weak economic conditions, we still have a roof over our head. So property market performance is about the behaviour of the population. So the characteristics of property buyers. Let's park population growth for a minute and think of all these things. Buyer demographics, they include a first home buyer, someone who already owns a property but is upgrading. They can afford a more elaborate property. Someone who is a downsizer, so an empty nester where the kids have moved out of home and they want to go to a smaller dwelling. Someone who's retiring, who might want a more affordable, more elaborate, or going to aged care. A property investor, all of SPI's audience, is one reason why someone might buy a property. An overseas migrant, they are part of the population growth, but we do know that most of them rent. Again, if you're that person coming off the plane, the first thing you're probably going to be thinking about is, where do I put a roof over my head? But given they don't know the city or the country, they're probably not going to go and spend $1 million or $500,000 or whatever on this expensive asset. They're going to get a roof over their head somewhere, and then they're probably going to want to establish friends and get kids in school and get established in jobs and get a bit of a feel for, do I actually want to live in this city or do I want to live somewhere else in the country? Eventually they might buy. And then internal immigrants, someone who's relocating from city A to city B for a whole bunch of reasons, because they don't like where they're living, because they've got to transfer in jobs, because they want to fly, flee to a location that's more affordable, a whole bunch of things. So they're all the reasons, and there are lots that are listed as to why someone might buy a property. Then we look at another characteristic is buyer capacity. So that's the value of the dwellings. So they've chosen to buy for a variety of reasons, but then their capacity, what can they afford to buy? Which is influenced by their individual buyer salaries. It's also, because property is so expensive, it's also the buyer capacity is influenced by credit policy. How will a bank treat my circumstances compared to someone else's circumstances? Buyer capacity is also influenced by interest rates. And buyer capacity is also influenced by a variety of government grants. A grant to help a first home buyer get in the market, a grant to buy a brand new property to help the developers out, or whatever. The third characteristic of buyer behaviour is sentiment. Again, we all need to live somewhere, but there's no law that says we have to buy where we live. And before we buy the asset, 99.9% of people have to first buy the debt. So it's the mood that we're in that will ultimately determine for most people whether they actually want to buy a property or not. So the things that influence buyer sentiment, the broader dialogue in the town, city or country that we live in. Is it positive or negative? Is it fear or is it excitement? The state dialogue, and this is why in different years, markets broadly doing well, Queensland markets broadly doing poorly, for example. So there can be a different dialogue from state to state. The local dialogue, you could have a really buoyant, energetic individual town or city that performs really, really well because the community's got a lot of confidence. But somewhere else in that same state or somewhere else on the other side of the country, it might be nowhere near exciting. Broader economic conditions at a federal or state level will affect the mood of buyers. And elections, I guess the fear of the unknown, whether it's federal, state or local, the different things that are proposed during an election campaign can have an influence on buyer sentiment. We all saw that during the threat of scrapping negative gearing, for example. And there's been other election periods where it's been, we're going to, if you vote us in, we're going to stimulate the property markets through grants and all sorts of things. So lots of things influence buyer behaviour, doesn't it? And now, what we haven't mentioned there, none of that has anything to do with population growth. So all those things can and will happen from year to year with or without a population increasing or decreasing. Does that make sense?
You've thought about this, haven't you?
It's my livelihood. I've got nothing to gain by trying to do anything other than teach people.
So let's just put the shoe on the other foot. So other people that operate in this market, if you were going to challenge your own assumptions or the people who would see the world opposite to you, what would they say? Simon, you got that wrong because of this. What do people normally propose?
To be honest, when we've explained to people, I've never had that happen. But again, people can believe what they want to believe. I believe this because this is my profession for many, many years.
Yeah.
And I've got not only years of experience, I've got a plethora of evidence. It's how I make my decisions in investing in property. I've got no vested interest to say anything other than what the studies have taught me. If others aren't convinced, then that's up to others. I don't care what others do. I'm just trying to help. Okay,
so we've spoken a lot about themes. We've spoken a lot about some pretty significant economic principles. And if you don't have a degree in economics, some of this stuff might just be mind-boggling. So there's probably a lot of terms that we've heard here over the last sort of 45 minutes or so we've been chatting that you might need some help with. So check out smartpropertyinvestment.com.au. We've got some great glossary there, and you can probably, get the information you need to know, or just do a Google search. That's all cool. But we've tried to, through audio, verbally, tell some stories about stuff that we can see on, and so some charts and stuff. And I think we've done that reasonably well. So trying to draw these themes and trends out. Now, but a lot of people like case studies. I like to actually understand, okay, I sort of get all of that, but tell me how all of this works in practice.
Yeah. So I've picked a case study here, Brisbane, only because it's my home city and it's obviously a city that everyone's heard of. And we're looking at the latest, most official data for Brisbane ending June 2018, Australia's third biggest city. Now, firstly, let's have a think about, if we wound the clock back 5 years ago, Sydney and Melbourne were in the early stages of their boom 5 years ago. 2013, we'd probably been growing about a year, really, really strong in Sydney and Melbourne. And the general rhetoric then, and has been for most, if not all, the last 5 years, from every Tom, Dick and Sally, is because Sydney and Melbourne boom, Brisbane will do it next, right? What we've heard is Brisbane will boom because Brisbane's more affordable than Sydney and Melbourne. What we've heard is Brisbane's population growth is strong, so therefore it will boom. And Brisbane hasn't boomed. I wish it had, because it's my hometown, but it hasn't. So now let's address the claims. Firstly, Brisbane is more affordable than Sydney and Melbourne, right? True. Sydney's median house price, $972K, Melbourne, $740, Brisbane, $536. So fact, Brisbane's a lot more affordable. Guess what? For 200 years that Brisbane's been established, it's always been more affordable than Sydney and Melbourne. So clearly just being more affordable doesn't make it grow. All of Australia is more affordable than Sydney and Melbourne, really. So it's not a reason in isolation. Brisbane's population growth is strong, so therefore property prices will grow, is the other claim used to say why Brisbane's going to boom. So let's look at the evidence there. Over the last 10 years, the average annual population growth in Greater Brisbane is 1.8% per year. Second highest capital city in all of Australia over that decade for population growth rate, just behind Melbourne at 2.1. Over that same 10-year period of time, apartment values in Brisbane today are the same as 10 years ago. House values have only increased 20% in 10 years, but yet Brisbane's population growth has been miles above the annual average. Adelaide's population growth has been 0.8% and Hobart's has only been 0.9%, well below the national average, but yet it's significantly outperformed, in this case, Brisbane. a lot of people think too, but I guess because Sydney and Melbourne are a large portion of the population in New South Wales and Victoria respectively, a lot of people sort of neglect to realise that it's not the same proportion right across in every other state. So in Queensland, for example, 53% of Queenslanders actually don't live in Brisbane. Queensland's a very, very diverse state. So be careful of that, listeners, when you hear Queensland's population growth grew by whatever, or interstate migration to Queensland was X%. There are more Queenslanders who don't live in Brisbane than who do live in Brisbane. That's one area where Brisbane's different to other locations. Brisbane City Council is one of 5 city councils all of Greater Brisbane, and it represents 24% of the entire state of Queensland's population. I'll say that again. Brisbane City Council. So we're not talking about Moreton Bay, Logan, Ipswich and Redlands. The heart of Brisbane is 24% of all of Queensland's population. But yet only 10.3% of the total state's internal migration, interstate migration last year came to Brisbane City Council. So when you hear all this rhetoric about Brisbane's going to boom because it's got all the interstate migration, the devil's in the detail. Of the 22,900 people or 23,000 total increase in Brisbane City Council's population over the last year, 50% of that total population increase was from overseas migrants. And for the same reason we were saying earlier when we were using the Sydney case study, overseas migrants don't typically jump off the plane and buy a property straight away, if ever, for some people. So the devil is in the detail there. According to the Australian Bureau of Statistics, 2.5 people per 2.5 people live in a house on average. So of the interstate migration, that really only increased demand for an extra 1,100 dwellings in 1 year. And Brisbane's got hundreds of thousands of dwellings. So we're only talking about demand for an extra 1,100 dwellings in 1 year from all this internal migration that everyone's hung their hat on, saying, I'm going to invest in Brisbane, it's going to boom because all these interstaters are flocking there. So hopefully people can see that whilst population growth is important, we need to really dissect it and think of it in a practical sense.
Lots of information there, Simon.
Lots of information. But it does highlight, hopefully, Phil.
Yeah.
Property is very, very complex, isn't it?
It's very complex, you know.
Very complex. But hopefully people can see why population growth is nowhere near the most important thing, and start to appreciate what is the most important thing is buyer behaviour. Think about property as shelter. Shelter increases in value if lots of people want to buy it. Just because population grows, it doesn't mean they're all going to buy it. Even when population doesn't grow, lots and lots of people still buy property for lots of reasons. So the more we understand and take an interest in the things that will influence buyer behaviour, the closer we will be to able to, I guess, see before it happens when a location is about to grow, which is what influences everybody within a community. It's economic conditions. Why do I always talk about economics? Why do I always talk about it's not just the economy today, it's the decisions that have been made today, last year, 2 years ago, that will have an influence on the economy in future years. Are those decisions going to have a positive influence on the economy or a negative influence on the economy? Because every person lives within that economy. Those economic conditions, as they change in future years, will influence all of that buyer behaviour. Is that making some sense?
It does. I've really enjoyed the chat, Simon. And I think what a lot of people do get confused about is that they think population means population growth, whereas, you know, the dynamics of population as a key driver of property markets is absolutely critical. The growth component of it is just one of many, 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 many parts of the population equation. You made that pretty clear. And look, it works for me. You know, the logic of it works for me.
So that's why Australian real estate history is absolutely littered with locations that have had very, very weak population growth figures, or in some years, actual population declines, but their property markets actually might have performed really well. And even in the last 3 years, as recently as that, some of Australia's better performed property markets have not had anywhere near spectacular population growth. But what they have had is confidence within the existing population. Confidence that might come from the fact that the cost of housing is affordable. Confidence coming from local things happening in the community, a new project or a new event. Most importantly, though, local economic conditions fills the community with confidence. Whether more people choose to relocate there or not, those who are already living there, they have confidence. And that's what everyone needs to transact in property.
I'd like to hear what everyone thinks about this discussion, and I think it's been pretty reasonable, despite the fact that we've spoken about some pretty complicated stuff and used a lot of numbers. So we'll follow up with all this, and we'll get it onto smartpropertyinvestment.com.au, so watch this space. But I'm sure Simon's happy to receive any feedback around this, to have this thought challenged or agreed to. We'd like to hear your thoughts. You need to get in touch with us, editor@smartpropertyinvestment.com.au. Simon, we've done all right there, mate.
We did it. I didn't know we go getting you an hour, but
it's a long one. It's a
mission accomplished in terms of the time frame. I guess the ultimate judge will be if what we've explained to people, if it makes, hopefully it does make sense and hasn't confused people more.
Well, this is it, and if you are confused, go out there, get educated, building on your knowledge base. And that's the only way you can improve as a property investor, is to embrace new ways of thinking about stuff to help shape your investment journey. Simon, thanks so much for joining us today. It's I know you're flat stick up there in Brisbane getting stuff done. So, and again, we're doing this over the web, but we're not in the studio. So we'll get back to that at some point in time. But under the current environment, we're doing everything virtually at the moment, which all seems to work okay. We can see each other, so it's all good. Simon, thanks, mate. I do enjoy catching up, and I'll see you again soon.
My pleasure, my friend. Take care.
Nice one. Remember to check out smartpropertyinvestment.com.au. Social media, Smart Property HQ. It's how you can keep connected with what we are up to. As I mentioned beforehand, in a couple of previous podcasts, please keep those reviews coming on iTunes or wherever you're listening to this podcast. The team here get a real kick out of it, as do our guests, including Simon. So let us know what you think. If you think we're worth 5 stars, please give us 5 stars. Any questions at all for Simon, I'll be happy to pass them on. Editor@smartpropertyinvestment.com.au is who you need to contact. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
The Trident formula, created by Sam Gordon at Australian Property Scout, is the strategic way to build a profitable property portfolio. If you're looking to perfect your strategy, go to www.australianpropertyscout.com.au to book a call with Sam himself.